afternoon, everyone. Scott Henderson, shooter. And hey, we are going to go over some charts, kind of see what's going on. Jump right into it. Of course, at the end of our presentation, please do review our disclosure. I'm going to start off just a little different today. I want to show a scan here. And this is a sequence of different filters that I run at different times during the day. And, typically I'm going to have a list of names here. And literally there's, I look for specific parameters to the search, and then it'll pop up different names. And in the last 2 weeks, this has gotten so thin. And that really is going to be the premise of what I'm talking about here, is that we're beyond what I would classify as even a ghost town as far as options, because we don't have, even though we're building in breadth in some of the AI infrastructure names, and these are names that have been in play for a while, we're basically non-existent. They're not buying this thesis. And on top of that, the noise that we're seeing in the equities, as well as the noise we're hearing about, as far as potential BOJ intervention. And the challenging part is I don't want to add limited, only risk that I want, or I think that will ride out that storm, because with a 50 basis point in the Bank of Japan, the last time it got us just shy of a 3% correction. Trigger is challenging here because obviously earnings are decent. However, if we look at the future look, what they're projecting, only about 32% are positive, whereas even last earnings, it ironed out to about 55%. Earnings before that, it was about 60%. So the outlooks have started to decline as well, which makes it very challenging. So we've been doing this slow grind higher, get a little bit of a pullback, then we test the highs, put in a little shallower high. So the more that this plays out, the more that I think the leg extends, ironically, because we haven't taken out these lows and we haven't taken out the prior low. So I think we are in this mode of slow grind higher, and they're going to continue to push and rotate this to the upside, which makes it challenging to stump on board with new names, because there just is not that follow through in any particular name that's going to give us that conviction where we're going to get paid at the end of the day. So I'm in this risk off kind of mode, but not a risk off kind of mode. In other words, I'm trimming into this because I don't want that exposure from BOJ. And however, I think there's as much likelihood that we push up to 780 this year as the fact that we might come down to 650 or lower. And it's going to be a swan event that takes us lower, because we've handled pretty much all the news that you could possibly imagine in 2026, and it has not taken us down. So that in itself is a tell. And I guess I should ask the question, all right, so let's jump over to the NASDAQ. Now, we had a nice pump. I think this is an earnings pop that we're seeing here. I don't think that this holds, because I think the ultimate numbers that this conflict that we have with China is right now, a couple of our big Magnificent Seven stocks are actually really exposed here, like Microsoft, because all it takes is one stroke of a pen in China to basically say, no, we're not going to accept your product in China. And really it's retaliation for what we've done with Huawei, or however you pronounce their Cisco-like company there, that we've blocked, and we're currently trying to take out of all types of communications that we have here in the US or with our allies. So I don't see that waning. I think there's a greater chance that the Mag 7 actually gets a rug pull, where they are limited in the Chinese market, which is way too much of their book. I mean, most of them it's 30% or more, and that would make it extremely challenging. So I think the NASDAQ has more euphoria into earnings if earnings hold, even with the outlook being weak, as long as those earning numbers hit. And Meta is one of the names that I liked into earnings, but I didn't put a position on. And with that, I'm going to jump to Meta real quick, because I want to discuss that. And that, the thought of basically Zuckerberg, the news has been that he's failed at his infrastructure. However, his hiring or firing doesn't reflect that. So I think this is a great stock for us to look at how this market is going to recover on an earnings. So, if we take out these prior highs. I think we're heading towards all-time highs, 950 range. So we have to take out this 710. However, right now, just with the market conditions, I don't have a lot of conviction in chasing that, so I didn't. So I held back and didn't put a position on. All right, let me jump into some more names after I address that. All right, I'm just going to run through this. USAR got a nice little pop on that acquisition. It's given quite a little bit of that back. I like it back down here around 23, 22 bucks, so it's going to get close. This gap holds. I'd like us to get into the gap and fill that gap, back around 22, 26. But then I'm going to be chasing these highs on the longer term picture as far as the rare earth minerals thesis that I have. All right. Now, Nova just took a dump right off the top there. So my thought when I posted in chat, it was a good time to take some profits. It turned out to be the case because I actually got stopped out of it. I was up 50% on my bull call spread and I got stopped. So, hey, I should have taken the profits when I threw it out in the room. All right, noted. Let's move on to the next one. DE is working. I think there's a lot of potential growth, especially with this mining expansion. I think that's an additional tailwind. So, we're looking for numbers back up around 600 pretty quick, I think. All right, now BABA is still working as well. Nice look. Forgive me, I have been working on a automated Fibonacci extension tool, and it's made my screens a little noisy at times. I'm trying to get it to work right around Elliott Wave and give me the number. So, I think the 618 is totally viable here for BABA. Now, I'm probably going to take profits into that. I think we're going to hit a little resistance around 186. So 185, 186, I might start trimming there a little bit. All right, SMCI, I still want a piece here, but outside of that small piece that I put on in calls, I haven't added anything here. I still like the thesis. I think my difficulty is the timeline of when the infrastructure are going to play, because I'm having a very hard time grasping that timeline because of the core problem that we have across the board with AI infrastructure, which is power supply. So until that issue gives us some kind of timeline, it's really hard to get to a half, maybe even a quarter position in some of these names until that confirms, and I'm surely not going to have a half position size on. So I'm going to be much more conservative on anything that I carry. But I do think this is a name that any kind of news of a contract related to a large buyer, as far as AI infrastructure, this thing's through the roof just because of how decent their margins are. And right now the market has not been favoring. So any positive news related to AI on this name, I think it takes it right out of this. All right, looking at Intrepid. Now we took some profits on this simply because it gave it back. I saw it at R1, so I'm looking for a pullback to around 30, and I'll probably buy something back there. That's my thought, though, but it's done nothing wrong. Just following the roadmap. EOS, same scenario, just holding on this shelf. I want to see it get out of here. But I think with the conditions in the market, I think it's more likely we pull back to 11 first. And, obviously I'll get more interested in entering something again at that point. All right, AST Space Mobile. Yeah, I'm on the wrong side of this trade. I still have $80 covered call. And I don't like the idea of that at 118. But they expire next month and then it'll disappear off my P&L and I won't feel like a chump anymore. So actually 2026 seems to be the MO, at least for me anyways, because I'm not in the positions that I really should have been in for whatever reason. However, I'm holding up well. I'm about 16% for the year, so that's not a bad spot either. So, but looking at AST Space, I think the 168 is totally viable. I think it could extend maybe as much as the 2618. Or even to the 3618. So just give me some kind of pullback so I can justify entering something else on this. Right now, the name is just continuing to work. Now, ONDS, put a small position back on it. Really hasn't taken out a pushback to the upside, but then again, it hasn't failed either. So we're sort of just waiting to see how that plays out. Now, let me go through some of the names. Now, Geo is closed. I noted that, as well as FCX. I closed on this candle here. All right. I get a pullback to 55, 56. I'll look at putting something back on. NTR, I closed on this candle today. Part of the reason is I'm looking at this band. FOMC, if it missed, I was like, I don't want to give back 50% of the gain because it was a decent gain for a common share entry. I think we had $18 on that one. Then UPS closed on the same news, turned out to be the right call, because we did pull back. I think this shelf might hold at 103. So we get back down there after this noise disappears from FOMC. And I would prefer a 50 basis point hike coming out of BOJ before I start loading back up. But that's my thought. As far as ALAB, now this is in my longer AI thesis, something that I like. However, it just wasn't acting in a positive way when I was looking at it. And my mindset was, I'm looking for a reason to trim. You don't hear me say that very often. I'm looking for a reason to trim, and I'm still looking for a reason to trim. The reason is I want to be higher in cash than I am right now. So when the opportunities do come, I have the ability to jump back on board with some conviction in the right direction, and I keep that P&L on the right side of the tape. So it's not dead. I just like it back around $1.50 now, just because of the market condition. We also pulled Planet Labs up here on this prior candle as far as breaking down there. I'm giving you some names here that I like for entries, marginal names. Cisco should be in it. I closed our position, I don't know, it was 3 weeks ago. That was premature, but I closed it on this candle down here just because of the way it was looking. It looked to me like it was going to fail, and maybe that actually became an ABC. Obviously, that's not the case with this candle. It's going to run. It likely runs back up to the 100 fib around $85. But I want a piece back on that. As far as Blackstone, I want a piece here, but I don't like the way these candles have played out the last 2 weeks. So we're going to wait and see what happens around 140. This is sort of my shopping list. AMSC, I want a piece back on this, but again, it was one of those names that just wasn't reacted in a positive way with any kind of relative strength. Still done nothing wrong. It's just I'm trying to micromanage what I have open in the book. Now looking at OKLO, also want another piece on that, because I'm eyeballing this primary wave free. Once it gets out of this, won't confirm the move till it breaks over about 116. Now SMR, I closed on this noise early. Main reason, it just got a bad report and somebody cut the outlook on it. I don't remember exactly which analyst cut the outlook, but it wasn't holding as relative strength. And again, I was back in the mindset. I was looking for a reason to cut, and I just didn't see the conviction in the tape yet. And again, this is attached to the AI infrastructure thesis, and power demand, and I don't have a timeline here, so that makes it challenging. If it's moving, I'll stick with it. If it's not moving, I'm not going. All right, Rocket Labs, a little bit of a pullback. I'm looking for a reason to get back into it. I'd like 67, but honestly, it's done nothing wrong, even at 73, 74. But ultimately, I don't think it has as much upside as some other names. But I like the thesis of space as a service. Now, CRML really dumped after the pump from Venezuela. So I'm kind of just watching it. I want a piece, but I really don't want to own it until we get back to the shelf, maybe about 12. I don't know if it's going to give it to us. So we'll hopefully some more of a timeline comes out about Venezuela and how that potentially benefit miners in the meantime. But right now, I do want a piece on because of Venezuela, because I think it's a long-term metals. That's my thought. Now, Adobe is getting very interesting down here. Really needs to clear about 50% of this candle, so 310. So, it's not even going to confirm back to the upside. I also like the noise on this in social media. I mean, it's where it's about every other day I'm hearing somebody write something about it. And that's always a positive thing. So we're looking at confirmation maybe around 362, which is a heck of a way from 303. So we're talking $60 till this thing confirms back to the upside. Yet we have a very defined risk to the downside. Roughly it's not going to be invalid unless we break below that 288. So, I like the look. These are the kind of names. I sort of look at Adobe as a stable. The only thing that I question about Adobe is I'm not sure how it's going to weather AI. It has a very defined, committed user, and that group, their products migrate well to AI, and I've seen what they've brought in. But there are startups that potentially could take a chunk of their business pretty quick if they come up with something a little more aggressive than what Adobe has. So that's something just to keep in mind as we're looking at it. Now, Marvel, I really want a piece back on this one. I would love to get back into my first buy zone. I don't think it gives us anything lower than that. I don't even think we even test the shelf at 61, but that's one that's really on my tape. Now, BAM came up as one of my scans this week. I didn't put it out there yet, simply, but I do like the look of where we are. Doesn't invalidate to 48, confirms around 55. Then I think our first target's 62. I think this shelf could build, but I'm looking for names that I can get a piece of that have held some kind of relative strength, meaning it's held the shelf, right? Completely. This breakout shelf, right? Long as this doesn't taste and break below that invalidation zone, the most likely outcome is that it pushes up to the 618 at 84 bucks. Well, I'd like to get a piece of that in this market. Now, I still like Intel. I've just never gotten an entry on this thing. I'd love a back test of 39, but I don't know that it's going to give us. There's a number of conversations about deals working with the Mag 7 as far as incorporating their hardware into the AI infrastructure. And now I haven't had the opportunity this week to dig into that because that was some news that I heard over the weekend. But we want to definitely look at Intel, and we do. It has the potential of getting back up to 80 bucks. Really does. So from an infrastructure play in AI, it has quite a little bit of upside as far as I. All right, let's jump into some name requests. Let's look at TLT. Now, TLT is not going to change much, and you're going to see this constant push, and then you're going to see it reject. Probably this push, and then it's going to reject. So it could push up to maybe about 91, but I would suspect that we reject maybe around 90 this time, and then we come back in and test our weekly support. And the only reason is because this just doesn't look done in this whole structure. Because if I break this down as an impulse leg down, that's where I see it a little bit differently. So, looking at this as our 1, this is our 2, this is our 3, this is our 4. Well, if it's a flat, it'll go down to 84. If it extends and goes back to that slope, pull it up so you can see it. So our slope is going to be about right here. So it's going to test these lows, most likely, I think around 82. That's challenging. It's challenging for the economy. It's challenging for equities. And it's also going to be challenging as far as liquidity. The difficulty here, I think the Trump administration is intentionally deflating the dollar to give us a quasi rate cut environment because it does the same thing as a rate cut. So that in mind, I don't want to get long and I don't want to get short here just for that reason. All right, let's look at MOS. Now we took profits on that on this candle as well. Get interested on a pull back to that 26 shelf it holds, even 50% back at 27 once this FOMC noise clears, but still it's done nothing wrong. I'm still looking for this push up at 47. It's just, again, I want to micromanage what I have on the table and, take profits as they are there, just to avoid this. Now, Stelllogic, it's running into resistance here. I've got a number roughly around 666. Let me come out to the daily or go to a daily on this one. I want to see what that. So we were confirming on this high, we're diverging on this high. So looking at this is on the daily, peaking drive 1, assume that's peaking drive 2. So peaking drive 3, probably get a little higher, maybe 645, and then we get a reject. I'm just looking at my count. Quality to me looks more like assuming that's our 4. 5 may push us up to about $7 if that's our 4. Realize this could also be an extension. This could be peaking drive 1 of a larger wave 3, which would take us up to about here, really extend this move. So it would make it, cleanly a measured move. Go back to the weekly so I can see where my fibs are. So a measured move could put us up to 2618, roughly about 1380 at some point. It's got a lot of euphoria here. But notice how it came off once it didn't give us, had these 3 pushing candles, right? We've got 2 pushing candles. It's got cleaner legs here. Cleaner leg. So there probably is a 3rd candle up here. So it could push up to about $9. I wouldn't trim until we get a daily candle that's pretty solid red and it takes out the body of the prior candle is how I would look at that. Let's take a look at OUST. That looks to me like an ABC. We're going to head lower. That's my thought. Really needs to take out the body here at 25.44 for us to even consider longs, but it looks to me like it's going to reject here at this point, even though MACD says it's bottoming and we're seeing some flatness in the RSI. It just looks to me like interest is waning here. And realize names like Oust will not do well on a 50 basis point hike from BOJ. So, literally on that news, we could be down at 12 bucks pretty quick just because of the way the name react and also the euphoria of this leg. Realize you have your first sell side imbalance down here, which, is right here in this range, which happens to be not, I didn't plan that, by the way. That's just how it was. So, I mean, it's right at where an ABC would be near equality. So that I would say very high conviction, 70% or greater, that we're going to see that kind of pull. All right, now Shack, we had rotation in the restaurant. That's waning. There are some names that are running, but basically you can watch KFC and Starbucks, and when they start running, typically the rest of the restaurants continue to run. So unless we have some huge earnings, I think it's done. That's just my thought. I mean, we could be in this flat for a while. I wasn't projecting more than 102, and we got it, on that second push, and then it rejected. So it came right up to this shelf, roughly, and then it rejected, which is right where it would have rejected or should have rejected if it was going to reject. All right, IoT. Now, I've got my auto fib tool that I'm working on here. And basically what I have this for a quick look, it's predicting off of the swing high and swing low. And I can set it where it's either on a weekly, a daily, or a 4-hour. And right now this is on a 4-hour. So what it's doing is predicting the direction based on that swing high and swing low, but it's adding a fib extension to that. So the idea here is it gives me a visual on what direction we're going to go. And right now, that scan is telling me that we're lower. And the first likely target would be that 24.53. Now, going back to the other technicals, is this shelf fails right here in that first flip, right there, which we're sitting right on it, okay? That pretty much brings us back down to this next shelf right here. I mean, and there is literally, once this sell side imbalance gets taken out, there's absolutely no support below there, which is right here as well. So we pull below this 28, it's pretty much guaranteed to go down to 24. It's good short act. And then our next buy side imbalance really is fairly deep, even though it's a shallow little piece right here. It's going to let me pull it. Would be way the heck down there. So, I mean, that's where we're going to see buyers. Buyers will show up here. Or I should say more buyers will show up. That's my 2 cents on that one. Circle's done nothing wrong as long as it doesn't take out this invalidation shelf at 640.71. I think this is our likelihood of what plays out as my thoughts. So I think our target is back up around 103. You could use this low, which is 67.30 as your stop. All right, looking at Bloom Energy. This thing ain't slowing down. It's going. I was looking at the extension on this, equality and let me just come in here for a second. Okay. When you have an ABC structure that occurs, AKA in a flat, right? But yet it's not impulsive, because cleanly this is not impulsive because we closed below the 618. Impulsive would be 382 or less fib extension. So if we come in and throw that in, I'll just throw that up there. So those of you who aren't familiar with how my work, I use a lot of different technicals. We've closed below the 618 fib as far as the retracement. So that is not euphoria in my book. That is, if anything, weakness, right? So whenever we are looking at this ABC structure out of a flat, so this is our A, this is our B, this is our C, technically we can start a new impulse wave from that shelf, right? So in that case, that's what I have on this chart. So this is a 1, we're going to get a 3, and then chances are we get a waning 4 and a waning 5, and it puts in a little higher high is the most likely outcome. But right now, chart looks good. Hold. All right, looking at Sentinel-1, it actually looks like it gets out of here. Confirms at 15.6. Actually, the best it's looked yet. I mean, that just structure, that 4-bar candle right there, or those 4 candles, how it's pushing out, especially on a weekly chart. I would say, your destiny is 1791. All right, UAMY. Now, I think this really needs to hold, the 684, but I think it's a good buying opportunity at 764. Right now, we're rejecting right at the sell side imbalance of this last leg where we push. Here again, I'm going to come in and throw up a shorter term fib here just to give you a visual. So we closed below the 78.6. So a little weakness there as far as just the way the tape is. So at best, this is and when I say at best, I'm meaning it's not likely the worst outcome. It may be the better outcome, which would be like a assuming this is a broadening form. So the most likely direction is back up to about 41. However, I'd rather get a launching pad down here before I try to and take a shot at that again. That would be my thought. IONQ now confirms above 55.71. It invalidates below 3789. Now let me scroll out, scream here for a second. This is looking like a leading diagonal. And leading diagonal 2 is broader than 4, right? Quite often leading diagonals come in shallow, and these are the counts that will be a penny over the prior high and then reject. That's quite often how they play out. So, whenever I'm looking at a particular wave structure, I fully understand what the potential outcome is. And in all cases, there's typically only 3 outcomes, right? Either it's euphoric, it's sort of flat, all right, or it fails and rejects. Okay, and those are really the only outcomes that you have. So you constantly are looking for tells of why this should work or why this should fail. So again, like you've heard me repeat many of times, know where you're right. You're right above 55.46 that it's going to continue higher. You're wrong, it closed below 38. But I don't have, it's on one of my lists somewhere, but I have, there are better names out there that I think will move it. All right, as far as, there were a lot of therapeutic that I looked at this weekend. I was actually surprised. Looks like a regular impulse here to me, like kind of equality. Not really a slow grind, but it does look trendy, except for it's broadening. So it looks like it's an ending diagonal. So your first shelf as far as rejection is going to be off of this sell side imbalance up here, which is right about where that 5 is coming in at. That's sort of my take on that. Done nothing wrong though. At this point, still a hold. I wouldn't even consider you do a confirming trend support line, off of this low, run it to 50%. You would have gotten wicked out of 50% already if that strategy is what you were using for your stops. So, trimming and going to 50% wouldn't be wrong here, as far as position size. Just as far as risk management, because we did win on this candle. And the fact is we really don't have a lot of upside until it rejects. But, $4 is still a decent trade to try and hold it. Really depends on what your risk is at this point and really how good your book looks after last year and the first month of 2026. All right, CleanSpark. I think this is a name that benefits from AI infrastructure. The challenging part is, again, back to that infrastructure timeline. Until that power issue is resolved, CleanSpark can't boom unless the systems are set up and then they have to run their security, whatever software in. So this is going to be after we're built kind of boom. So we could literally come and test these lows, and I would like it much better at $5, but I don't think it's going to get there. I mean, it gets a test back at 870. I'm probably going to jump in that at that range as far as my thought. All right, let's look at INDI. Fibs come up. Did I turn it off? Must have turned it off. I don't remember turning it off. All right. So, nice structure. Good impulse. Wave 1 is done. Wave 2 looks like it's in on the larger structure down here from our lows at 153. So that clearly is our 2. 2618 is going to be a shallow 3, which is not always or should not be considered the norm. Usually it is your longest wave. So I would say the 3618 at 1648 is probably your most likely outcome. This actually has the potential of really pushing above the 4236, about $18 to the upside. So it's got a lot of upside right here. Definitely looks good here from a standpoint of, it doesn't confirm until the trend change, until we get above this little spot right here at roughly 477. This is a potential flush ARO. Don't like it here. Reject, didn't take out the confirmation, right? So the most likely outcome is that this is an ending diagonal, the way it looks right here. Don't like that. Or I wouldn't hold on that, unless I had a strong conviction otherwise. So I'm looking at that this is a corrective structure. Now, just like I had shown, I'm forgetting the name already I was at when I was showing flattening pattern from a ending or leading diagonal, as the case may be. Quite often they're shallow. Very often do you get a full extended 5. Usually it's going to push just a little bit lower than where our 3 was. So if my visual is accurate that this is an ending diagonal, we're going a lot lower. And what I would say confirms that is a break below this 956. So in all cases, I wouldn't give it any more room. All right, let's look at India. I think I got that name correct. Now, this was going to be my guinea pig today. So when we look at a WXYZ pattern and realize basically it's a flat, is what it really is, to a wedge, right? And then it finishes and breaks out. This is a failed XYZ pattern, which means that it most likely is what's referred to an XABC pattern, SABT pattern, which is going to do something like this. And most likely it's going to test your immediate support around 480 to 270. So that would be what I would say as far as the visual here, unless it clean and gets back above this shelf. That's where I start to change my mind and I might chase the gap, right? But it's going to reject at that gap, no matter what way you look at it. So that, and what's ironic is not only is, India was supposed to boom here and we're not. Now, I don't know if that has to do with tariffs. I don't know if that has to do with the fact that they weren't as big a benefactor from the relationship in China as we thought they would be. But, there was I'm forgetting the analyst who pulled the call out last year. It was February or March 2025. He called for a bottom in the rupee, and he was pretty accurate at that point. However, the coin's completely flipped. So I would not add here because it's rejected the shelf. And I really haven't started looking at other jurisdictions or as far as the way it looks. Periodically I have, but it's not on my weekly to-do list where I'm going to go look at, per se, Brazil, South America, or Africa, or Europe, etc., unless a particular thesis includes them. The reason is because the dollar's way too noisy here. And until this noise settles down with what the resolution is for Japan, which is really the largest liquidity vehicle for equities, it's going to be a little challenging chasing anything in another country, except for maybe something like Guam, might be something that's stable, something where we've seen, for example, the textile growth that shifted from China, and they've successfully competed in that market, where we're not seeing the deflation being dumped into the market out of China or their specialty manufacturing that's sort of stabilized there a little bit. But, I don't think we're going to recover in the first quarter anyways, as far as India is concerned. So I would probably steer clear. So, all right. Any other names somebody wants me to go over? MDA. Didn't I go through that? MDA, AMTX. MDA on CSX, right? No, MDA is not on my list, and only because I didn't. After looking at this chart, it should have been. All right, let me go to AMTX. Amentus. All right, now I made that call this morning at $1.60, and it was right on spot, wasn't it? I think we got a shot at $4. We need to take out this confirmation of a trend change. We got some positive news out of Washington. I would expect that there's some kind of funding vehicle to follow that. I don't know if it'll be this quarter, but we need to take out this confirmation shelf at 228. Then we're off to the races. Then we can talk about a breakout from there, but that's going to be after a pullback. And, obviously, if this shelf holds at 325, we're heading back to the upside. Yes, I am actively looking for ways, and I'm not having a lot of luck, into both metals and mining and the AI infrastructure. Though the thesis was on target, I was a little late getting to that. And that makes it challenging because nothing's cheap. It's sort of like right now, they changed the margins on silver. They raised it 30%. And SLV has a minimum purchase of 5K now to even buy any shares. So the challenging part with all the metals is now everybody sees it. With volatility, it raises the risk for the broker dealers. So even if you're in, like for example, I have Kennedy dimes, I have a crap load of them. And I'm in like at $15, $14.50 in that range, most of it. I called my dealer here and he's not even buying. So that's going to be the next issue with silver. I wasn't planning on selling it all. I just want to see how much I can get for a piece of it, and then make a decision whether I'm going to hold or not. Because that was part of my catastrophic positioning. Hey, the world's going to end. I can trade with silver dimes. That was my thing. So, but as far as metals across the board, yeah, I'm actively looking at, for new ways into that. And, but again, I'm not going to just jump in on a thesis because, I might chase a little bit, but I'm trying to completely avoid that in 2026 just because of the market dynamics that I'm seeing. And I think I'm in much better touch with the reality that it is actually happening in the general dynamics of how liquidity works in the market because of how well I've been connected to AI and being able to analyze things that I couldn't look at before. I didn't have the time to look at. So I think I'm seeing a much bigger picture with that. So in that sense, that's toning me down a little bit because I see the potential that we enter into a bear market. But I'm not convinced it's going to happen, though, if that makes sense, which is where my survival score came from, because I'm now constantly looking at specific pieces. And honestly, it was time consuming. And by automating it a little bit with AI, it sort of saved about an hour a week of my time. And I can push a button and it gives me an answer in 3 seconds flat. But it does not see what's going on in the Bank of Japan right, because it hasn't washed into price yet as far as the risk. So, that becomes the challenging part. Okay, back to the charts. I was chatting there a little too much. You can get me off on a side tangent really pretty quick. I am definitely a rant person when I get on. All right, so looking at Galaxy, actually a good looking chart. Nice recovery here. And I'm going to come in here and take this auto fib tool off and draw my own. Only because it gave me one perspective and I want a different one. 820 roughly. So rejected right at the 1618. Nice retrace, good spot, 3 peaking drives, solid structure. So I'm going to measure another leg here because I want to see what that looks like. So we have a clean leg to measure. 1618, 83 bucks. Confluence up there with the wave structure by a quick guess. 3618, 158 is totally viable with this. Nice look. That's one you want to hold. PDYN actually starting to recover here. I can't own them all, no matter how much I try and want. I'd say that you got a pretty deep. I'm just going to do this to get my thing here. Put the fibs back up. I'm giving you guys all my secrets, how I look at charts, huh? Rinse and repeat. That is a tough wave 2 to measure and decide where it's going to go, just for point of reference. 1618 is 17 bucks off of, just measuring this last leg. Totally viable. It's going to get really noisy, and we'll go out to the monthly on this one. How did I know there was a quick drawdown? So, I'm taking them both off. Hold on. They help if I click the right tab, wouldn't it? Now, those of you who are just wondering why I changed my mind on the look of that chart, because when I zoomed out to the monthly, what I see here is an ABC on our 1. So this is our A, this is our B, this is our C. So that changes the dynamics of the look. And wave 3 still could potentially be the longest wave, but we need to have a significant catalyst for us to take us out of these highs, because the most likely outcome is that this is an ABC within an ABC. ABC is there. So this is your A, this is our B, and this is our C. Now, the challenging part was an elongated or extended A, which possibly could be, just because of this candle. So that would mean that C could be extremely shallow. So we could see some rejection right here at $14, $15 and then roll right back over. And in that case, we're going to test the beginning of this shelf right here at $2. But I would say the most likely outcome is probably to test these highs and then reject there. But that's sort of the look. But right now it's recovering. So I wouldn't, if I'm holding, I'd keep a position on with this. Melly and Hood. Trend broke, first thing. However, it's testing it again to get back above it. That was a nice trend. Really tough read up. It broadened here as well. More of a channel than a broadening formation. More of an ascending wedge. I'm doing this because the wave structure is giving me nothing. No tell either way. So I'd got a shot at 3K. That's for sure. All right, let me jump over to Hood. I got really no opinion on that trend because there's no reason it's going to fail. It's already rejected, broke trend, and then it's recovering. So it's not going to give us any news until we break above the highs as far as that look. You won't hear me say that very often. The challenging part with trading trend, or at least that I find trading trend, is that it doesn't necessarily honor Elliott wave. So the challenge there is if you don't have a visual tell with the indicators that you're using, you're really blind. And that, so you're either a believer in the thesis or not. So, but Hood, I would think that we hold this shelf. We're going to finish out this leg to 245. So it rejects, really it closes below this shelf. It's really not rejecting there, but I would look at that as my invalidation spot if I was trying to get something long. The reason is you'll get a better price. And better price would probably come in right around here, around $80. So that would be my thought on Hood and IIPR, and then we'll end with that. Yeah, now, the buyers still haven't shown back up. And, there's, the challenging part here is this, even though I don't believe he's put an executive order, he's threatened to remove hedge funds' ability to purchase more residential property. I don't know that, we had an 8% drop in existing home sales last month. I don't know if that was the result of that, or if it was actually all of the foreign nationals being removed from the U.S., because I've noticed it as well in my community, where I've seen families that were there that are not there now, and those properties are just sitting there. They're not necessarily up for sale, but there's nobody in them either, and they don't appear to be managed by the residential properties. Now, I would look at this as a late stage of the AI infrastructure play, simply because that power, they're not going to be building them to manage them until the power issues resolve. So I don't think it's going to be this quarter where this recovery, and it looks to me like it's going to totally reject. So that being said, I'm going to go out to a monthly time frame and give you a visual on where it potentially is going to go. This is one hell of a wick. $40. We're already well past that. So we had clear seller exhaustion here, and we got very aggressive on the sell side here. Monthly ABC equality is a little bit lower, just if it's an ABC structure, puts it back down at $25. Got a lot of downside potential. Okay, STZ, nice recovery candle, at least on the monthly anyway. Let's look at the weekly. It's running into resistance here big time. Sell side imbalance is the cause right here. Of course, it's not going to stick for me. So we're going to cheat where I want it to be. So we're right at that sell side imbalance as far as the push wicked off to a little bit, probably a little bit lower. I think we have more inflation coming in the food supply. On top of it, this cold snap. I was out at my favorite pub the other day, and I like their mushroom and sort of like a mushroom Swiss cheeseburger kind of thing they make there, and they don't have mushroom. Thoroughly disappointed because I was looking for it. But my point being is this cold weather is having a negative impact on what consumers are going out and buying, because they have limited access with all the snow in different parts of the nation. Now, of course, we're used to that, in areas where we have cold weather, but I think seasonality is an issue with food and supply at this point. However, it is going to recover on a clean break above 196, which is way the heck up there. Again, this is a name that has some room to run back to the upside. So I don't know that that's a bad idea. It looks like a very shallow impulse. Maybe I got the wrong line again. So this should come in and put in a 4. So it gets a pullback to maybe 154. It's worth a shot for that 5, but I think we get some rejection before that line. So again, it's going to reject, push, reject again, and your better spot probably after that is to enter a second piece at 163. MDA, let me just cover that one again. I don't think it's a bad call, Tom. All right, so it has quite a little bit upside. Anytime you have a broadening formation, it's going to give you some euphoria in your price. So, that's what I see us having here. And we are definitely channeling up towards back to the upside. But realize the initial broadening formation was here. So we overshot on 2. That's a very euphoric retrace there, and that's a very euphoric push. I would not be surprised if it rejects again and tests this low. So you just want to expect that. So if you're in it, you want to manage using something like a confirming trend support. So use your candles, 50% of that particular candle, roughly 33.31, use your anchor, and then use that 567 your anchor. It takes that out. You want to be out of 50% of it, is how I would look. Okay, I'm going to end with that. Anyone have any more questions before I cut and run? Perfect. All right, folks, you have a great rest of your week. Let's see what the Fed's going to do. We got about an hour till they print. No problem, guys, gals. You all have a great day.